Okay, so the catalyst for me to discover Bitcoin was the K-shaped recovery, the combination of the lockdowns and the expansion of the money supply. And I think what we saw was in the K-shaped recovery, Main Street shut down for a year, Wall Street recovered in a few weeks, and there was a delamination between financial assets and mechanical Main Street type assets or operational assets. And that caused me to question the nature of money, because if I had $1 billion worth of Wall Street assets like the S&P index, I could have gone to sleep on my floaty in my Hampton swimming pool for a year, and I would have had the best year of my career doing nothing. And if I actually ran a Main Street company selling something or doing something, I could have worked 30% harder and generated 30% more cash flow, and I would have got nothing. And this dichotomy between one class of the economy working 30% harder to get nowhere, and the other class of the economy not working at all to get 30% further, caused me to lose a lot of faith in the economy, and it questioned my thought about money. And so if we go to first principles, Peter, I think the most important idea is money is financial energy, or it's socioeconomic energy. And I think a lot of people don't realize or don't think about it as an energy system.
Yep.
And as soon as you think about it as energy, then the light bulb goes off. And Peter, you're an engineer, I'm an engineer, and I spent many years after I left MIT not really thinking about engineering principles applying to money or finance. And I think that in March of 2020, it shocked me out of that lethargy. So I'll give you a simple analogy. Fat is organic energy. It's an organic energy storage battery. You know, if you eat a bunch of food, your body generates insulin, you store the organic energy as fat. The benefit of storing that fat is that you can go without food for a month and you won't die. Now, so fat is a energy system for storing organic energy. There are other systems for storing organic energy. I can have boxed food, I can have Twinkies, I can have canned food, I can have smoked food, right? I can have fish in a pond behind my house. I can have cows outside in the pasture. Those are all systems for storing organic energy. We call it agriculture, or we call it packaging. Now let's think about other energy systems. You know, I put a sail on a ship. That's a way to harness wind energy. A clipper ship with 3 sails is more complicated. A bow and arrow harnesses kinetic energy or potential energy. So does a dam. I can have a gun. I can have complicated machines. The entire science of engineering is about channeling energy, whether it's gravitational energy or wind energy or chemical energy like a fire, or organic energy. So now I get to money. So money is a system for channeling that social economic energy, the ability to compel other members of the human race to do something, or to, you know, will you give me your house? Will you give me your car? Will you drive your car for me? Will you build a building for me? Can I live on it for life? Will you feed me for the rest of my life? Will you work for me the rest of my life? All of this is about channeling energy. The human race has had energy systems for money. We started with seashells. We trade the giant stone cone of the Yap people. Eventually, we settled upon gold. And gold is commodity tokens, but it wasn't just simple gold. You know, the Lydians had gold coins, the Romans had different gold coins, the Italians had the florins, you know, the British had the pound, the sovereign comes along. So eventually we realized that moving around gold tokens, or tokens in general, isn't that efficient, because you can't chop them into pieces. And if you're holding them, people club you over the head and steal them. So sometime early on, certainly 500 years ago, we split, and we had the underlying base layer money, maybe gold, and then you had gold paper, like gold notes, and you had paper money. And the paper money issued by first goldsmiths and then issued by early gold banks and the like, that allowed us to trade credits. And that went on for 500 years. And the world shifted between this base layer commodity and paper money. We eventually had the quote unquote gold standard, which is you can trade $1 for gold and trade the gold for the dollar. Then with the Treaty of Genoa in 1922, we had a gold reserve standard, which meant that the dollar and the pound were the reserve currencies. They were backed by gold and everybody else was backed by the dollar and the pound. After World War II, we went to the Treaty of Bretton Woods, and that meant that the US dollar was a reserve currency. It was backed by gold. And then everybody else traded their currencies for the dollar. What's the significance? Eventually in 1971, Nixon took us off the gold standard completely, and we went to all fiat, not pegged to any underlying asset. And what that meant was, in the absence of any thermodynamic cost to print more money, you don't need to mine gold, you don't need to do anything. We could just expand the money supply, and that resulted in about monetary inflation of 7% a year, every year for 40 years. That I didn't figure out, but what that means is if you're expanding the money supply by 7 to 8% a year, every year, that means that your assets have to appreciate by 7% to keep purchase power parity. And that means if you're earning, if you're not raising your salary by 7%, you're getting poorer. Now that went on a status quo from 1971 all the way to 2020. In 2020, the monetary inflation rate in the US went from 7% to 21%. It tripled. And every other currency in the world's pegged to the dollar. They at least tripled. So the euro tripled, the DRAM tripled. All the strong currencies tripled their inflation rate. The weak currencies inflated 40% a year. And so they're sinking against the dollar. Then you've got the peso with nominal 45% inflation rate, but real inflation rates of 70% or more. And then you have collapsing currencies like in El Salvador, the currency's collapsed. In Nigeria, it's collapsing. In Lebanon, it collapsed 85%. In Zimbabwe, it collapsed. So what is the significance of Bitcoin? Bitcoin is the first engineered monetary system in the history of the human race. And that's the light bulb going off. We created an asset sitting on an open computer network, and there's never going to be more than 21 million of them. You can divide it into 2.1 quadrillion Satoshis. So it's pretty infinitely divisible. But what it means is the human race has perfected the idea of a bearer instrument like gold, and we fixed all the defects of gold. If I bought $1 billion of gold, the gold miners will keep dumping more gold on the market. If the gold ever goes up by a factor of 10, gold jewelry gets melted down to dump gold on the market. And the fundamental problem with the gold standard and the gold reserve standard is there is no hard mathematical protocol or engineering protocol that links the paper gold or the fiat derivatives to the underlying asset. So as soon as the US got control of the gold supply after Bretton Woods, they could keep printing more and more money, and they weren't. And first it was 40% backed by gold, then 30%, then 20%, then 10%. Then all the other countries in the world realized that the US was just going to print infinite dollars, and the French got upset, so they started asking for the gold back. And when the French asked for the gold back, all the gold was flowing out of the US. And then Nixon said, oh my God, we're going to have no gold left, and so we can't keep giving people gold back. So we defaulted on the gold standard, and now everybody's free to print as much money as they wanted. And so that's by the way why you don't want to buy gold, because if you buy gold, a gold banker can basically sell 100 tons of gold for every 1 ton of gold they own. You call it hypothecation. There is no integrity between the paper derivatives and the underlying asset. And the absence of that technical integrity means, and we come back to engineering, it means that that I put energy into the system and it bleeds out 10% a year. So if I had a bathtub bleeding 7% per period, right? The bathtub drains, the swimming pool drains. If I have a leak in a fuselage of an airplane, it won't fly. If I have a leak in a hull of a ship, it won't sail. So Bitcoin's the first thermodynamically sound system.